All right, let's talk about your typical EB5 project and how it works. In EB5, there are two main terms. One is called an NCE, the other is called a JCE. The NCE is a new commercial enterprise. This is just usually it's a limited partnership or an LLC. As an EB5 investor, you are buying one share of this NCE. So you own a share of the LLC or the limited partnership worth $800,000. This NCE is managed by the NCE manager, which is us at EB5 United. Technically, that's the investment issuer. Oftentimes they'll call us the regional center, but technically the regional center is another entity that is just designated to facilitate EB5 projects in the area. Sometimes the NCE manager and the regional center are the same owners, and sometimes the NCE manager is just paying the regional center a fee so that they can use their designation. And really the NCE manager, though, is who is running this offering. The money goes into the NCE, you have the NCE manager, and then it is loaned or put in as equity into a project or a JCE, a job creating entity. This job creating entity might have other sources of capital, maybe other loans, like from a bank. A bank loan will usually be in a first position ahead of the EB5 loan, and then you'll have developer equity. So the more developer equity and the more financing that is subordinate to you as an EB5 investor, the more protection that you have, because any subordinate financing or developer equity is going to be lost first before the EB5 investors are impacted. Okay, so then at the end of the project, what's going to happen is this project is going to pay interest or whatever the deal is, whether it's maybe it's a loan or maybe it's equity. They're going to pay that interest or a preferred return or whatever it may be to the NCE. A portion goes to the NCE manager. That's how we make money, and a portion goes to the EB5 investors. At the end of the project, when you have a liquidation event, you have the bank gets paid off, the NCE gets paid off, and whoever the other financiers get paid off. Anyone that's subordinate to the NCE gets paid off after the NCE, and that includes the developer. Sometimes the developer and the NCE manager are the same entity. We never do this because we see it as a major conflict of interest. This has become a huge point of concern after COVID, especially because the majority of projects that had issues and went underwater because of COVID, and that I have not seen a single one that where the developer was the NCE manager and the NCE manager went after the project. I have seen projects where the NCE manager was separate from the developer, and that means once the developer defaulted on the loan, the JCE defaulted on the NCE loan, the NCE manager went after the developer and took the project from them. That's what's supposed to happen. This NCE manager should be a fiduciary, but if they are also the developer, they are not a fiduciary. That means they do not have the same aligned financial interest with you. If the NCE manager is separate from the developer, their financial interest is aligned. If the loan is in good standing and it's getting paid, the NCE manager gets paid, as well as the EB5 investors. If it's not in good standing, they lose money. And the NCE manager's job is to go after the developer to protect the EB5 investors. So when you're investing with a group like EB5 United, who always acts as a fiduciary, you're investing with a group that is our financial interests are aligned with you, and we are in this to protect you. Here's a typical EB5 project capital stack. You see that, let's say you have a senior loan here. This is the first to be paid back, and then if there's an issue, and then you have preferred equity or mezzanine loan coming from EB5, and then you have developer equity. What we like to do is expand this developer equity as much as possible. If we are in second position, now this is what would happen if there was a default. If a developer defaults on the senior loan, and let's say we have an asset with significant collateral that is backing the investment, what we would try to do is go cure that senior loan, because once they get paid off, then they cannot foreclose. So we, as the mezz financer or preferred equity, we would come in and try to cure that senior, and then we would try to take the project from the developer, because as a mezz financer, you are secured by the developer's equity interest in the project. So you take over that if they default on your loan. So either way, we're trying to do whatever we can to maintain all the capital for our EB5 investors. Here's a couple projects that we've done in the past. I can't really show our current projects just for SEC restrictions, but this is some deals that we have done, so we can kind of show you how we like to structure deals. This is a 9 Orchard project. This was in New York City in the Lower East Side. This hotel just opened recently. It's absolutely beautiful. If you're in New York, I highly recommend you go check it out. We lent $88 million in a first position, and then we had $135 million of developer equity behind us in this project. This project's completed. It was a $223 million deal. The asset would likely easily sell for well over $88 million. So if this developer defaulted on our loan, we would take the asset from them. We have the first position. There's no bank in front of us, and we would be able to run it or sell it or refinance it to make sure that we get the $88 million out to be able to repay all of our investors. We don't foresee that happening, but that is how it's structured and why it is such a secure investment. Here was the montage in Big Sky, Montana. This was a rural project that we did in 2020 and 2021. And so we were able to raise some EB-5, a mezz loan. We had $175 million of senior financing from a bank. And then we had some EB-5, and then $196 million of developer equity. This level of developer equity is just not really seen in the industry. This is a very high number, very secure number. Both these projects are now open, very successful, and things are going great. At EB5 United, we're now closing in on close to $600 million of EB5 capital invested in our projects. We've helped over 1,000 investors obtain more than 2,000 green cards for themselves and their family members. So that's more than 900 I-526 petitions and 485 I-829 petitions approved. This is our team. We're spread out all around the world, and we really try to just spread our branches out. We have network finders that are all over the world helping us procure investors, and we are out there raising all of this capital. Here are some projects that we've completed in the past. Done deals in Montana, and New York, and Puerto Rico, and Los Angeles, Portland. This one was repaid in full to the investors. A few of these loans will come up in the next couple of years and will be repaid as well. Here's a few projects in Miami, DC, Chicago, and more in Boca Raton, Florida. Here's our team just kind of out working the streets and getting in front of investors. A few basic guidelines when you're making an EB5 investment. Number one, choose the right legal representation. It's vital to have a proper source of funds completed. This is what is going to get you a green card. We have never had a project denial. We wouldn't expect that we would ever have a project denial. We're working with very competent attorneys. The USCIS is going to ask us multiple times if they do have questions and allow us to respond to those questions before they would ever issue a denial. And so the most important part of you obtaining a green card is finding the right legal representation, because they need to properly source your funds in order for you to have an approval. That's why we have such a high approval rate also, is because we really try to just work with very strong EB5 attorneys. Next is to identify a project that minimizes the immigration and investment risk. Immigration risk is 10 jobs. We have projects that have the 10 jobs already created before you invest, or a lot of those jobs created. That is the number one criteria to obtaining a green card. And our investors always want a green card. They want a green card, they want a green card, and then they want their money back. In EB5, if you're trying to go for yield in your investment, you are going to take on a lot of risk for a little bit of return. The main return in EB5 is that you are obtaining a green card. So issuers are going to know that. And if you invest in a risky equity portion of a deal, and you may be taking on significant amount more risk for a very small amount of return. And we've had a difficult time selling projects like that. And so we moved to a loan-based model for the majority of our projects. And we like to just secure the $800,000 for our investors. That's our number one priority, is twofold. One, to create 10 jobs so everyone gets a green card, and two, to return the full $800,000, because this is an at-risk program. But like I said, it does not have to be risky. So our underwriting and evaluation is what is mitigating the risk for our investors. Here you can scan this QR code. This takes you to our website to a page about the EB-5 program that will go just A to Z, talking about everything that I've gone through here today. And you'll be able to see a lot of information on EB-5 step by step from day one till you have your permanent green card in hand. Like I said, I can't go into detail on projects just due to SEC restrictions, but just a brief overview on what we have available. And you can scan the QR codes and go to the project's website, the project pages on our website. And then if you are out of the country, or if you're in the country and you sign an accredited investor questionnaire for us, then we can get you the passwords to log in, and you can see videos at all the sites and information on all the projects. This is the one and only project. It is the third EB-5 deal here in Big Sky, Montana. So it is a rural project, and it is currently under construction. We're already raising EB-5 funds for it. We have a first position loan that we're raising for this project, and you have all the benefits of priority processing and rural set-aside visas. So this project is getting eaten up in China, India, and Vietnam. And in the first about month and a half of accepting investors, we already procured about a quarter of the investors for this project. It's selling out very, very quickly. Here is the LaSalle project. This is in Chicago. This hotel is right here, if you can see my cursor. So it's right in the middle of the loop. This is the Chicago River. It runs out, it loops around and runs out to Lake Michigan. That's why they call this area here the Loop. This is the main financial street, LaSalle Street. So in New York, you have the New York Stock Exchange here. You have the Commodities Board of Trade. That's this building here, two buildings down away from our building. The Chicago Federal Reserve Bank is here next door. And so all these businesses around here in these offices and in all these large buildings, they all service all the hotels in this area. So you have constant inflow of work travelers throughout the year. And then in the summertime, the prices hike up really high because then you have a lot of visitors coming in to see Chicago and check out the city. It's the second largest city or the third largest city in America, but the second largest downtown metro after New York. This project also, I'll say, for the Chicago project, this opened in June, so the hotel is open. We finished half of the financing for this, of the EB-5 financing for this, before the program shut down in June of 2021, and now we're just finishing it. The developer put in additional equity to complete the project in lieu of the EB-5 that we weren't able to raise. And now we have 1 year from when they opened the hotel to replace that equity that the additional equity he put in. And so you can invest in this project, which has all the jobs created and is already open. So most of the risk is already mitigated. Same goes for Bishop's Lodge. This project is also open as well. It opened to full capacity in May of 2022. We are financing an additional pool, spa, and fitness center. So there will be, we're going to continue the construction for 1 more year, and that's starting this fall of 2022, and will go till the fall of 2023. Like I said, this hotel is fully operational and cash flowing. So jobs are already created as well in this project. So it's another place that you can invest into a project that already has the jobs created and is already a completed asset. And so you can have a lot of security in your EB-5 investment. I hope this was informational for you. Please contact us at EB-5 United. If you'd like a consultation, I can set you up. We'll set you up with one of our sales reps. You can find them there on our website, and we look forward to speaking more with you. If you have further questions, just reach out. And if you want more information on our projects, please contact us. If you're in the US, we just have to have an accredited investor form filled out to make sure that we are following SEC restrictions. And if you're outside the US, we can go ahead and get you the information more quickly. Thank you for your time.